Hey guys, it's Matt. Today I'm going to be talking about the different ways you can diversify your portfolio in order to prepare for retirement. Now, these different ways to diversify follow the same principles as FIRE, which stands for Financially Independence, Retire Early. But it is not primarily the focus of this video. Now, when most financial advisors are talking about portfolio diversity, they're actually talking about the different ways you can reduce risk in your retirement portfolio for your stocks and your bonds mixture. But today I'm actually going to talk about the whole gamut of investing for your retirement, including real estate investments, bonds, IRA retirement accounts, as well as business ventures. Before we begin, I want to disclose that I'm not a certified financial advisor, and a lot of the investment advice is just my personal opinion and experiences. So please do your own research before investing. Now, the first and most important retirement investment you should make is smashing the like button for the YouTube algorithm. I'm just kidding. Actually, the first and most important investment you should make is contributing to your company's 401k retirement plan. Now, it's important to note that you should be putting in whatever percent contribution of your paycheck that your company's actually going to end up matching with your 401k. For example, if your employer will match up to 4% of your income each month in 401k contributions, and you're only putting in 2 to 3% of your income, then that 1 to 2% difference over decades is missing out on potential tens of thousands of dollars in exponential growth of just free contribution income from your employer. Now, there's a lot of people that actually will go above this minimum contribution percentage and contribute something like 7 to 10%, but anything over the 4% the company would match doesn't actually get you any benefits from the company anymore. But I don't personally recommend that. In fact, any extra savings you can get after your expenses and your paycheck should go to any other investments that we're going to talk about. This leads to our second investment that you should be making in order to prepare for retirement, and that is real estate. Listen, I know most Americans want to buy their forever home and grow old with their family in their house. And that's a good thing to do. But what I'm talking about actually goes beyond your personal residence. While owning your house as an asset in your portfolio is great, when you retire, even if you pay the house off in full, you still have to pay yearly taxes and insurance on your house, and it doesn't provide any cash flow to your retirement. My goal, and I think most people's goal, should be to acquire 3 to 4 rental properties over the course of your 40-year working career. Now, I know most people will say,
I don't want to be a landlord and deal with annoying tenants.
Or something like,
what if they destroy my house while they're in it?
And yes, there is the possibility of a bad tenant, but that's why it's extremely important to have a vetting process for who you allow to live in your residence. And never to sacrifice your tenant standard just to get the unit filled. Also, finding a really good property management company can make being a landlord much less stressful, and it only eats into a portion of your cash flow each month. Listen, even if you're only able to get one extra property to be a rental over the course of your working career, in 20 to 30 years, that property will be paid off, potentially updated by you, and then producing somewhere between $800 and $1,000+ in cash flow each month, feeding into your retirement. This provides a really important buffer for you, and in the event that the stock market has a crash period, or you have a personal life event that affects your cash flow. If you can make an extra $200 to $300 in cash flow per rental unit you own in your younger years while you're paying them off, then that extra money can actually be used to invest in other things that you might actually not have had money to do otherwise. Which leads us into our third investment that you should roll your extra money into, and that is investing in the stock market. Now, this investment's after your 401k, any IRAs or savings, as well as your real estate investments. Now, there are different avenues to approach when investing in the stock market. I recommend starting out putting a large portion of your investment portfolio into S&P 500 ETFs, index funds, as well as large mature companies that produce dividends like Walmart, Coca-Cola, and AT&T. Once you have a comfortable portion in these stocks and it helps you reduce your risk, you can start moving into the more riskier but more rewarding growth stocks. Now, this avenue isn't required, but with the right research and analysis, as well as following societal trends, you can really skyrocket your portfolio just as easily as you can quickly get all the value down to zero of your stocks. Now, I made a video on this previously, so click the link in order to find out more on how to make money through growth stocks if you're curious. So our fourth and final investment method for your retirement is establishing your own personal business or building your personal brand. As we all know, some of the most wealthy people are the ones who established their own business and grew it, and the people that establish their personal brand through acting or website building. Whether it's a particular set of skills or a hobby that you excel at that you can find a way to monetize, or if you just want to share your insights and knowledge on platforms such as YouTube, creating a side hustle that you can build a sizable business off of is one of the best ways to retire from your regular day job earlier and move into that. To wrap it all up, while our younger generation may not be focused on retirement, it is important to establish a goal and a plan to get to where you need to be in order to comfortably retire, whether early or later. Also, just because you're older, that does not mean that you can't implement these investment and retirement strategies now. Don't make your past an excuse for your future. That's all I have. Don't forget to like and subscribe to the channel if you enjoy the content. Thanks. In terms of bonds, ETFs, and invested you can follow the video on this establishing